to the RSL. We have two parts of our business. One is our app, where we serve clients all over Australia wide, which are individuals and micro businesses. And we have our firm in Five Top, where we also serve clients all over Australia wide, except for one state in Tasmania. If anyone can find me a client in Tasmania, I'll give you a blue label for free. Because I want 7 states. And yeah, so we're very innovative accountants online and also face-to-face focused with personalized experience. So we have received numerous awards since we started up in 2024. Australian Accountants Awards are the biggest accounting awards in the accounting industry. So we were 2024 Startup Firm of the Year all over Australia. We were Rising Star Awards, the most innovative firm in Australia. We were finalists for Innovator of the Year, and 2025 we are finalists for Innovator of the Year as well. And the results have to come out in June, fingers crossed. So in terms of our team, we are 2 partner firm. So that's me on the left, and that's my boss, who is my wife as well. And we are a family business. So tax legislation. So it's always been a Tom and Jerry game. So whenever like we accountants find a tax loophole and start telling our clients, oh, you can do that to save tax. What do the politicians do? They close that loophole by what? Releasing more and more legislation. So in 1996, there were 3,000 pages of tax legislation. Right now, it's more than 10,000 pages. And this is growing and growing, and it's getting complex, and there's a more and more need to have a good accountant on your side. That's a little bit of disclaimer. I wrote it from ChatGPT. It's just saying that we're a small business, don't sue us, okay? So number one thing, like everything when you start off, the structure is very important because it determines how much tax your business has to pay, how other businesses deal with you, your administration costs, and of course your level of asset protection. Most common structures use are sole trader, partnership companies, and trusts. And there's no right answer. Every business requires a different structure. That's why it's always good to speak to an accountant and sit with them and choose the right structure, what you're planning to do. It's not like a company is better than sole trader or a trust is better than a partnership. It's nothing like that. Every business, every client, every family needs a different structure. So always make that decision. And number 2 thing, like we have to do all of those, like running a business, have obligations should be your number 1 thing, because I see quite often, sadly, that businesses are doing great, they're making great money, but they have huge tax debt, and then this is just a cycle. They pay the tax debt, another debt, and it's kind of like a credit card debt that's chasing you. So always, keep the compliance up, keep the money separate for the tax man, and also have a good accountant that actually does those tax planning to save on tax. And number 1 thing, forget about all the strategies that we're going to look at today. Number 1 thing is good record keeping. If you can get one thing out of this presentation, just have good record keeping. Just every time you go to office works, every time you fill up that car, take a snapshot of that receipt, because no matter how beautiful the zero looks like, if ATO audits you, you don't have an invoice, all of those deductions are zero. Okay? So now let's talk about some tax strategies, and these first 3 strategies are on your personal tax return. Everyone has to lodge a personal tax return, even if you're a business operating to a company, trust. With your personal tax return, number 1 thing is concessional super contributions. So the cap is financial years 30,000. So if you're, let's say, the wages that you're getting from your company or from your employer, it's just contributing 15K, you can put additional 15K into super to get a big tax deduction, and then in the future you can ticket vehicle, number one thing is your principal place of residence. You buy it, you sell it, it's totally tax-free. That's number one in tax concession we have in Australia. Number two is super. There's nothing better than, there's nothing better than super. So use super to the advantage, and then also, as David would say, happy retirement is everyone needs that, you know. And then if for example you had a big CGP event, you sold an investment property, or your business had a big contract for this financial year, you can contribute up to 5 years of super contributions that we haven't contributed for the previous 5 years, that are called catch-up contributions for this year, to minimize that big CGP or that big business gain. But your balance has to be below $500,000 to make that strategy. Number three, on the personal level, I'm not a financial advisor or an insurance broker, but all I can say is income protection insurance is tax deductible, and it's always, when you have mortgages and things like that, it's always good to have income protection insurance to protect your risk, and also payment tax deduction. We do not know when that things can happen to us, you know, so always have some, manage some risk. No less, move on to business deductions, and everyone knows about this 20,000 instant tax write-off. So it's available this financial year as well. So number one thing, and these tradies make this mistake, my clients, oh, 20,000, what should I buy, what should I buy? First of all, buy something. If you want to take advantage of this, buy something that actually is going to bring in more revenue, or build a better experience for your client, or you actually need it for your business. Now, I used recently as the 20,000 tax write-off, and that's this beautiful. See, it's an expensive phone, but it has made me use my laptop, not making me use that laptop that often. I can attach emails, I can do things like that, and it has made my life easier, and it's bringing better, more. I'm replying to my clients faster and things like that. So this investment, this $3,000 phone, is actually an investment for my business, because it's building my client relationships better. So think about those things, and then you can use that $20,000 write-off. Another thing, and if you're not going to tell your accountant, the accountant will never know. So if, for example, you have a client that hasn't paid $20,000 worth of invoice, and you keep on chasing them months after months after months, it's still sitting up in your profit and loss as an income, right? You have to tell the accountant, they're not paying me that. So the accountant will write off that. That means it's a tax deduction for you, and you pay lower tax. So every year in May, June, look at all your account receivables and look at what are the debts that I'm never going to recover, you know, the invoices that I'm never going to recover, write them off. Another thing, trading stocks. So people who have trading stock in their business, for example, a barber shop would have hair waxes and things like that that they sell to the client. Trading stock is actually becomes an income in your profit and loss. It increases your profit. The more stock you have in one hand, for example, the tuna can, the more tuna cans you have in stock, the more tax you will pay. So you got to look at those tuna cans at the end of the year in May, June. How many of them are expiring soon? If they're expiring soon, write them off. They will actually save you tax rather than keeping it in there, and the accountant will look at closing stock, $20,000, okay. They lodge it, and then you pay that tax. Another thing, prepayments. So you can pay up to 12 months of expenses in advance. So if you had a big year this year, why don't you prepay rent up to 12 months? Get a big tax deduction in June, and next year you probably would not have that big contract that you were dealing with this financial year. Your rent is paid off for the next year, and this year you will pay less tax. Another thing is home occupancy expenses. So most of us have offices somewhere in White Dog and things like that, but we also work from home. Like I work from home a lot. I have a separate room in my home that I work from. So you can play all of the processes related with that. You measure the floor, the area of that room compared to the area of the house, and you can play those portions of the house. If you're renting, do that. If you own the house, just make sure, just talk to your accountant before, because as I said earlier, your house is the biggest CGT-free asset, biggest tax concession. If you're starting claiming your interest and mortgage and things like that, a portion of that house will actually become a CGT asset when you sell it. So be careful if you own that house and you're claiming all of those costs. Donations, another strategy. So like I see that a lot. Like if I'm shopping at at small places, and then a pop-up comes on the website. By the way, we donate 2% of our profits to Greenpeace, or for example, like that, right? What are they doing? They're donating 2%, but actually it's marketing, right? Donations are tax deductible, but someone who's like, oh, 2% to Greenpeace, that makes them buy more. So why don't you like donate a little bit of something that you care about? And actually, it's kind of like a marketing expense while you're supporting the works of a charity that you really care about. And someone, you mentioned electric cars, FPV free. So yeah, if you're looking out for a new car, like if you buy an electric car, it's FPV free. So FPV is additional tax on the private use of the car. For example, someone is using their business car to pick up children from school. That pickup car is actually private use, and you have to pay FPV tax. But on the other hand, with an electric vehicle, it's FPV free. So you can use. I won't say you got my point. This recorded. So another thing, employing the family. So some of us have teenager children, and they keep on asking for pocket money. You say, well, clean my office and I'll give you the $50. And if it's put them on your payroll. You know what I mean? Rather than just handing out that $50 out of your tax paying money, you say, you do that work. It will take you 2 hours. The market rate is $25 an hour, $30 an hour, and I'll pay you for that $2. What, you get a tax deduction, and pay, you can have money to go out to the city and party. So, another thing, gifts to clients, suppliers. So, like if the tax is more, that's another strategy, which is also a marketing strategy. Like, if you give gifts to clients, it attracts more clients to your business, right? They'll keep on talking about, oh, my accountant gave me this champagne, let's drink this together, and things like that, right? So they'll talk more. It's a marketing strategy, and also it's tax deductible when you give out to the clients. So you can use this strategy as well. Another strategy, making holidays tax deductible, and this one is a bit. I know it sounds too good to be true, but there's a catch to it. For example, I have to do a lot of CPDs, right? I have to do 60, 70 hours of CPD every year. So what I do is I look for CPDs in golf course, and that portion of it's a two-day conference. So that portion of that 2-day conference, my flight, like if I'm going for 7 days, 2 days of my flights, my accommodation, and everything is tax deductible, not the whole trip. So you can take the family out holiday and do those CPDs. Another thing, if we have employees or we're paying ourselves, and June payroll is coming soon. So when you pay, just pay the super before June as well, because if you wait till July, that tax deduction will get transferred to July, while if you pay early, you get that tax deduction early. Another thing, so if we do not own we own cars in our companies and trusts and things like that, but sometimes we use probably the wife's car or someone's car, or like going to a short trip to the office works, that's not our work vehicle. The ATO allows up to 5,000 kilometers to be claimed without any substantiation requirements. All you need is a reasonableness of claiming that. So you can use our app, Tax App Australia, and all those incident travels. You can log it in and claim the kilometers. They give I think it's 77 cents per kilometer this year, and you can claim that for those incident expenses. In terms of tax app, so our process is a bit different to what typical accountants do. What typical accountants do, they prepare your tax returns, they lodge your VAT, they do a little bit of bookkeeping, and they give you a piece of paper and they say you sign, this is the bill with the date, and this is my bill, go by a and they must count. That's not for us. What we do. So when the client comes, we start off with business advisory. We look at, okay, how is your business doing? We look at cash flow management, we identify growth opportunities tailored to specific your business needs, and then we look at asset protection. Okay, is the current structure protecting your assets? And then we look at tax planning, and we look at how to minimize your tax using those structures. And then we go back to business advice. And now you'll be thinking, okay, so what kind of accountant is he? Then prepared my tax returns, tax returns, and things like that. These are all byproducts that we do. We are putting our clients to this wheel process every year, while these things are just the byproducts that are being produced. So that's why we're different. So I'll just give you a tax planning example of using structures. So this client, they had an income of $510,000, and if we followed their previous accounting strategy, they will be paying $178K in taxes. We utilized a bucket company for their trust, and we saved them about $72,000 in tax. What we do tax planning at this stage in May, June for all of our clients. Always good to sit with your accountant and say, okay, unit by unit. After June, you can't do anything. The cutoff has happened. The new year is done, right? So you have to sit with your accountant. What tax am I looking to pay, and how can I reduce it? And like that, this client came from another accountant just to get a second opinion. We showed them that they can save $72,000. They became our clients, and you know what they did for that $72K? Their son graduated from uni. They gave the $72K to the son, and he's ahead of all his peers. He bought a house in Townsville, an investment property. So when you can save tax, like Gabby said, don't donate to the ATO. Their strategy is available. And this is a business advisory example. This was an electrician. It's 6 months figure. So he had a revenue of $700K. And if you look at it, 6 months, his own compensation, which means his own salary was $100K, and after deducting his salary, he was coming up at a profit of $165K. Looks good. He was pretty happy. He was like, I don't need business advisory. So $200K salary, $300K profit. It looks good. So I said, okay, let's just compare it with top 20 electricians in Australia, all of this size, and we were like, with this wages that you're paying your employees for 6 months, your sales should be for the 6 months 900K a month. And he said, how can I do that? So we said, you need to upscale, you need to cross-sell, and upselling is someone says, someone calls you, hey, can you change this downlight? And you go like, you're changing this downlight, and you think, you use this switch often, it's pretty far from your TV. Why don't I install something that you clap and the light comes off, and clap, and that generated another $1,000. And this is upselling, cross-selling. We said you need to implement performance pay system, and Google reviews. So then he was like, okay, how can I implement this? So we don't hope. Now our job is done. I said, do you have a business coach? He said, get me in contact with him. I said with the business coach, I said, this is what we need our clients to train at. The business coach ran for 1 to 2 months, training the employees, training the clients on these matters. And on the 3rd month, their sales grew by 30%. And then they're following it every month. So And in terms of us, so we have 53 5-star Google reviews. I didn't bring my cards today, but if you search accountant FICO, the most reviewed accountant is us. So you can get in contact with me. And then these are 4-star app reviews, which are actually better than 0 and QuickBooks average reviews, but they are very small. And that's pretty much it. Thank you very much, everyone.